Welcome to CFSI's webinar, The Dual Promise of Secured Credit Cards. I'm incredibly excited to present this research to you today. I think it's going to be really fantastic, and we have some amazing panelists. So let's get into it. These are your speakers for today. I'm Rob Levy. I'm a Managing Director here at CFSI, the Center for Financial Services Innovation. I hope that most of you on this call are familiar with us, but we are a nonprofit focused on improving consumer financial health in America. We have two other really wonderful panelists here. Cori Swanson is the Director of Consumer Payment Products at the First National Bank of Omaha, and Rob Meloche is the Senior Director for Global Financial Inclusion at Visa. As you'll hear more in a second, Visa and CFSI have partnered on this research. I've been the lead on this project, and Rob Meloche has been our key lead on Visa's side, and he'll be explaining a little bit more about Visa's role. And Cori was a participant in some of this research and has one of the best secured cards on the market through First National Bank of Omaha. And you'll also hear from her after my presentation about what they're doing and what's so exciting about it. Before we get going, Cori, do you want to give us a couple sentences on your role at First National Bank of Omaha?
All right, thanks, Rob. Like Rob said, I'm Cori Swanson. I've been with First National Bank of Omaha for about 17 years. The past 4 or 5 years managing the secured card portfolio for our business, and that includes our agent bank partnerships, our co-brands, and the national space.
Great. Thanks, Cori. Rob, I'm going to give you your chance in just a second here. Also, I should say, as you've probably soon realized, there are 2 Robs on this call. I promise you I'm not talking to myself in the third person. When I refer to the other Rob, that has a moment of confusion at times. So if you do have any questions for either of us, please direct them either to Rob L. or Rob M. or to CFSI or Visa, respectively. We'll make sure that everyone gets the question to the appropriate person. So this research comes out of, frankly, just one output, one deliverable from a year-long project between CFSI and Visa called Secured Credit Cards, Innovating at the Intersection of Savings and Credit. And it's really been a wonderful partnership for us to explore this topic. And I want to give Rob Meloche some time right now to talk a little bit about his perspective and why this work is so important to Visa.
Yeah, thanks, Rob. And I'm always happy to be confused with Rob Levy, so feel free to make that mistake as we go along, those who are on the call. But it's a pleasure to join you all. Thank you for participating in the webinar. We are really excited about this research, and we've got some more work coming over the next number of months. Just some background, our financial inclusion work at Visa, what we try to do is find those intersections between products and programs that can generate a significant social impact while at the same time generate an eventual commercial return for our partners like FNBO. We think secured credit cards can be one of those examples, especially when considering the lifetime impact a good credit score can have for the consumer and the lifetime value that consumer can bring to an issuer. Rob's going to get into these numbers in a minute, but the scale of the problem we're trying to tackle is staggering. Some 45 million people in the U.S. do not have a credit score. You probably all saw the Bureau's number posted last year. That's 20% of the adult population. 26 million credit invisibles, and another 19 million with limited history. As we all know, credit scores are not just about accessing credit. Not only do these individuals have a very difficult time finding affordable credit, they face additional barriers as credit scores come into play when people are trying to rent an apartment or land a new job. We can't address this problem with just secured cards, obviously. We also need to take a better use of alternative data and new underwriting models. But this research and the experiences of our partners like FNBO and many other banks and credit unions suggest that we could be making a much bigger impact in the near term if we could help drive innovation in the secured card sector. And supporting that sort of innovation is why we launched this initiative with CFSI about a year ago. But the other reason I find secured cards so intriguing is that they are that rare platform that enables transactions, credit, and savings all in a single product. I think we may be underestimating the power and potential in that combination of services, not just for low to middle income consumers, but for millennials as well. All secured cards start as a savings product for the consumer, but we tend to lose track of that over the life of the product. So this research shows that consumers are definitely thinking about it. Even the name of the product to date, secured credit, is taken from our point of view, not the consumer's. It focuses us primarily on what the product can do to mitigate risk rather than what it can do to address consumer needs. We're hoping this research not only results in a better secured card product, and as Rob Levy and I often joke, a new name for it, but prompts us to think about how we might work together to reimagine the entire platform. We're excited about the consumer insights and the provider best practices CFSI was able to capture, and we're especially grateful to FNBO for being willing to share what they've learned as a leader in the space. As Rob Levy said, this research is just the first step, and we're looking forward to continue to support innovation across this platform. And with that, Rob, I'll turn it back to you.
Thanks so much, Rob. Really appreciate it. It's been both an insightful journey, but also just a lot of fun working with you and your team at Visa. And I'm glad to be able to share it with the world here. So let's dig into the research. And I'll remind everyone again, if there's a few last-minute stragglers under the call, that if you have any questions, please just enter them through the questions panel in the GoToWebinar system, and then we will look at them at the end, and then there'll be a couple points in the middle, and we'll try to address your questions there. We're going to do about 20-some minutes of talking at you, which is not how we like to do it, but unfortunately the webinar setup sort of forces us there. But after that, we'll try to have more of a dialogue with the panelists and with our audience. So as Rob Meloche said, this is a big problem. The problem of access to high-quality, affordable credit affects our estimates over 100 million consumers. There's about 45 million that are unable to have a credit score. Either they don't have enough, they have no history at all in the credit bureaus, or they have limited history and not enough to generate a score. And that number is from the CFPB. So that's already a staggering number. And you can think of that number being made of a large chunk of millennials and immigrants and folks that are new to credit. Obviously, a key demographic that many financial institutions are really interested in targeting. But this card is also beneficial to a lot of other consumers that are struggling with subprime scores. Approximately 63 million, depending on how you slice it, of people that have scores that make them more or less ineligible for a traditional unsecured credit card from most of the issuers. So you put those numbers together and you have about 100 million people that could really benefit from this product, which is a known product to improve consumer credit scores. I'll talk about more how it works in a second. So there you go. We've got 100 million people that lack high-quality credit, and yet this card only represents about 1% of U.S. credit cards are secured cards. Our research found that we think there's approximately 6 million secured trade lines in the United States, and I should say we're not totally confident about the number, because one of the challenges with this product is that it's actually very hard to know how many credit cards are secured. Many banks don't even know what percentage of their card portfolio is a secured portfolio, and the credit bureaus also have difficulty accessing the status. So unfortunately, these are some estimates, but we think they're in the right ballpark. That this is really used by a small number of people compared to the 1/3 of this country approximately that we think could be using this card to improve their credit. And so, with that was sort of what kicked us into this product. It was like, hey, it's a great product. It improves, credit scores if people use it right. So why are so few people using this product when so many need it? Before we answer that question, though, let's level set a little bit on how secured cards work. And in fact, one of the challenges of this product is that so few people actually understand or even have heard of the product. And that includes those, like yourselves on this call, that are inside the financial services industry. You can think of a secured card as working almost identically to an unsecured traditional credit card, with one big exception. It requires a deposit that's put aside, typically in a savings account, and that amount represents the credit limit on the card. So it's, say, a $300 deposit. You put that money away, and then you can get a $300 limit on your secured card. After that point, after that deposit is put away and essentially is frozen for you, the card functions exactly like a credit card. It has all the same regulations and stipulations of a credit card, balance payments, the Schumer box, et cetera, et cetera. But that first piece is firstly a big hurdle for consumers, but it also is protecting the risk of issuers who might not feel comfortable providing a credit card to someone that doesn't have a score or that has a low score. By having that deposit, which they can access in the case of a default, their risk is protected, which is sort of why it exists in the first place. So and if you look on the right on this slide, the consumer experience here is a little bit of a long one. They first need to understand that they need this card, and that can come because they were rejected for or declined for an unsecured card that they applied for, or because they just know that they don't have a score and they've heard of this product, although it's a smaller group of people there. Once they then say, okay, I need this card, they have to apply for the card. They have to get approved for the card. Now, approval rates are pretty high for the product because of the deposit, although not everyone is approved. People that are going through bankruptcy, for example, are usually declined. Then they get approved for the card, and there's a whole nother step that the unsecured card doesn't have, which is where you have to fund the deposits and put that money aside, send it to the bank, transfer it over, however it works, to establish the card. Then, you get the card. Of course, once you get the card, you have to use it successfully, which means paying off your bill on time and managing your credit responsibly. Then, while doing that, waiting for your credit score to increase, which can happen in as little as 6 months, with then the hope that your provider will graduate you to some form of unsecured credit, which could be simply returning your deposit so that your card is now an unsecured credit card. It could be sending you a new unsecured credit card, or it could be that your whole point was that you wanted to improve your score so that you could get an auto loan or a mortgage or some kind of other credit product. And we'll speak a little bit more about graduation strategies in a second. But that's how the consumer process works and how the card works. I also wanted to show some of the typical fees on the product. And I think it's really important to recognize that although this product is generally targeted towards the subprime customer, it is by no means a traditional subprime product in terms of what you may have heard of high-fee cards or fee harvester cards in the past. The fees are quite reasonable. The annual fee is as low as $0 in some cases, as high as $39, usually somewhere in the middle. The APR is in the 20% to 24% range. Some of the credit unions offer a lower APR. So that range might seem a little higher than a prime credit score credit card would have, but it's pretty reasonable for this product, certainly lower than any of the sort of traditional subprime cards. And of course, the low limit on the product means that consumers can't carry a huge balance and therefore can't pay a huge amount of interest on the product. The minimum deposit for most of the cards that have large market share between $200 and $300. Some go as high as $500, but that's basically your range. And then some of these cards have additional features. We'll talk a little bit more about this later. One of them enables a partial deposit where you can put down less than what's actually required, or less than what is your limits, rather, making it a little more easy to fund that deposit. Many of them now offer free credit scores through FICO and other services. Some of the cards allow you to add to your deposit after you activate the card and thereby increase your credit limit. And an increasing number of cards here are actually having some kind of rewards, usually cashback rewards. So that's how the product works. If you have any questions on that, please submit your questions to the system. Let's talk about the business model now from the issuer side. And our research, we really tried to dig into this to understand the challenges with this product, because it definitely works differently than your unsecured card. And the takeaway is you got to have the long view. On the cost driver side, obviously you have to market the product and acquire the customer. Ballpark that around $150 per user, but that can vary dramatically depending on what that strategy is. You then got to underwrite the product, even if that underwriting is fairly straightforward. You also have to do KYC because you're opening up a deposit account. Then you have to open the account, which is essentially actually opening two accounts, right? You're opening the credit card, but you also have to open the savings account for the customer. And this is, our research found, actually a complicated process. It's often fairly manual because for most banks, the card side of the house and the deposit side of the house are pretty separate. And this is one of the only products where they really need to talk to each other and communicate back and forth. And that creates just, various burdens on the system. Then you've got to maintain the product, service the product, and do customer service. So those are all your cost drivers. And they're not terrible, but the problem is that the revenue drivers are very minimal. The annual fees, as you saw, are pretty low. Interchange is going to be minimal because consumers have a low credit limit and simply can't spend a ton on this card. And in fact, if you're trying to optimize the consumer to only spend a portion of their credit limit, they're going to have even less interchange. Interest, as I said, is low. The interest rates are low. And again, we're not encouraging customers to carry a balance, so you're not going to make a ton from interest revenue. And then, of course, there's some from late fees, but again, that's not something you want to encourage. That's not what you want to be your key revenue driver. So as a result, what we found is in the first 1 to 2 years of this product, it essentially is a net neutral or even a little bit of a loss for providers. And some can get it to be marginally profitable into the second year. But it's not, this is not a high ROI product when you look at it just in those first couple of years and just on its own. Where it really becomes a profitable product for the issuer is when you think about that long-term relationship and when you think about graduation, whether it's taking them into an unsecured card with a higher limit where you can generate more interchange, or it's being able to offer that customer an auto loan or even a mortgage where that customer can get a decent rate but still provide some returns to the issuer. That's where the product becomes profitable, but that really means that the moment of graduation of taking the customer from the secured card to whatever comes next is very key to this business model. Fortunately, our research has found that most consumers, about 82% who expect to graduate, plan to use the same issuer for their secured card if they go into an unsecured card or another product. So they are committed, they are loyal, but they have to be served, they have to be appropriately communicated to in order to keep them and get them into that point where this product becomes viable for the issuer. We also did a consumer survey as part of this research. We surveyed 400 active secured card users, and I think this is one of few surveys of its kind. And we asked them a whole number of questions, and you can look at our full paper to get 30 pages of data tables if you really want to dig into the research, but I'll sprinkle a few data points into this presentation. One of them was that we asked, why do you want to use a secured card? What's the purpose for you? And I should say we went into that question with the hypothesis, which was that consumers would have one of two purposes. Either they wanted to establish new credit because they were new to credit and they wanted to build their credit, as we talked about that 45 million consumer base, or they wanted to rebuild their credit because they had a subprime score, that other segment that we talked about. And more or less that represented the majority of consumers when you put those two together. But what we found was that wasn't the only reason, or rather there were some consumers who had a primary reason other than those two for using a secured card. And in fact, 25% of the people we surveyed said that they really needed a card to make purchases, and we call them transactions. This looks a lot like prepaid card users who are using that product to make purchases online. And in fact, we'll talk about later, there's some interesting overlap between prepaid and secured cards that we came out of this research with. We also found that 19% of users saw this card primarily as a way to save. And that's really exciting, and it harkens back to what Rob Meloche was saying in the very beginning, that we think there's a savings opportunity here, that people actually might value putting that savings away, kind of keeping it at arm's distance, using the product to build their credit, and then having that savings later should they need it. With this research, not only did we do the consumer survey and the business model analysis, but we also talked to at least 24 issuers, providers, and companies that are working in the secured card space to really understand what were the challenges facing this industry and what were some of the most innovative solutions that are out there right now. And frankly, we found that there's a lot more innovation happening in the market than we even knew about. And we do think this is really a great moment for secured cards. Consumers are more aware than ever about their credit rating and how important it is to so many aspects of their lives. And issuers are looking for ways to reach out to these customers and bring them in. So it's really a right moment for secured cards. That said, there are some major challenges in the way to really robust growth for this product. And our paper identified 4 key challenges. I want to spend a little bit of time here. The first challenge is around increasing consumer awareness. So a number of consumers just don't even know this product exists. As Rob mentioned, it has a pretty terrible name. And as far as I know, there has never been any kind of commercial that I've ever seen for a secured card. For all the marketing you see for every other kind of credit card, very few marketing dollars are put behind this product. In some cases, it's buried on banks' web pages. There's very poor messaging. It's not fully articulated. So consumers just don't know about it. If they know about it, they're confused about it. And it's a complicated product, so it requires more nuanced messaging to help consumers understand. So that's a real challenge. In fact, probably the biggest challenge to getting consumers into this product. But there are some exciting things happening. And one of the biggest things that we've seen is the opportunity to leverage this product through prepaid card customers, essentially to market it to prepaid card customers. And we know many prepaid card customers are what we might consider an underserved or financially unhealthy consumer or low-income consumer. And for years, they've been asking their prepaid providers to help them build credit. And now we're starting to see prepaid providers offer their same customers a separate secured card. Green Dot, as you see on the screen, has talked publicly about wanting to do something and launching something this year. Another company called Banking Up, which offers a really great prepaid card, is in a partnership with Treasury, where they are testing the ability to use money from the savings purse on the prepaid card and then transition that money into deposit for a separate secured card from a separate company. This is really exciting because you now have consumers who are aware of the need to build credit, want to build credit, are easily accessible because you can go right to them because they're your prepaid customer, and they actually have access to funds on their card that they can use to make that transfer into the deposit, which is the next challenge. So really exciting stuff there around the prepaid opportunity. We talk about that in some more depth in the paper. So the second challenge is around funding the deposit, and this is a big one. For those of you who saw the Atlantic article, the cover article from last month talking about the Fed's research, that approximately half of this country is not confident they could come up with an extra $400 without selling something or borrowing. So people just don't have that extra $400, which is pretty close to the amount of a deposit for a secured card lying around to fund the deposit, let alone then wanting to kind of lock it away and not have access to it. So that's a real challenge, and we actually saw some providers said that a majority of the customers who are approved for the card don't end up even funding the deposit. That then, of course, increases your acquisition costs and really makes the consumer experience very challenging. But there are some innovations in this space as well. The most notable one here is Capital One's secured card, and they offer a partial security deposit, which means they do some additional and more in-depth underwriting at the application process, and they say, okay, if they sort of segment their consumers who are applying for the product, and for those who have a slightly better credit history or they feel are slightly more credit worthy, they'll say, you know what, you have to only give us a $49 or $99 deposit, but we're still going to give you a $200 limit. Now, once you get down to $49, that's a monthly cell phone payment. That's much more digestible for the average low-income consumer than $200. And I think that's going to increase the rate of people who can not only apply for the product, but then fund the deposit. And I think this is a real moment of innovation for a lot of the industry here. This third challenge is around optimizing consumer usage. So credit experts agree that you generally want to keep your credit utilization rate to around 30% or below when you're using a card, a secured card, or frankly any credit. And now, so imagine a consumer for whom this is their first product, and they have a card with a $300 limit. That means you want to spend about $100 on that card each month and then pay it off on time. The two biggest factors contributing to your credit score are on-time payment and credit limit utilization. But keeping that balance at just $100 means you can only go to the gas pump a couple times before you're there. So you really got to limit the usage, and you need to have good advice and ongoing communications to help consumers understand how their usage of the card is impacting their credit score so that they can reap the benefits of this product, improve their score, and graduate. One of the most promising innovations here is around the FICO Open Access Program, which is now working with a number of issuers in the country to offer consumers the ability to see their FICO score either through their statement or on their online account site. And this enables consumers to sort of be real-time, seeing how their score is improving, whether it's going from no score to a 650 or from a 620 to a 680. They can see their score improving in real time, which I think will encourage the ability to use the product well. They also get some advice, depending on how it's set up, about what is most impacting their score. And what's also nice about this program is that it's being offered, in most cases, across the bank's credit card portfolio. So banks are using the FICO Open Access Program to offer this to their mainstream consumers as well as to their secured card consumers, which means they don't have to make an investment just for a small subset, but this type of consumer usage, advice, and score, and data can benefit their entire customer base, and in addition to their secured card base. And then finally, this challenge around the graduation path that I've already alluded to. This is a big one. And in some ways, it's almost an afterthought because you've already got these 3 challenges you have to get a consumer through before they can even think about graduation. But it really needs to be made much clearer for the customer and to understand where they're going, this product's going to work for them. Because this takes time, even under the best of circumstances, to improve a consumer's credit score. And one provider that we talked to made an analogy to Weight Watchers, right? Weight Watchers can't promise their customers that they're going to lose weight because ultimately it also depends on what the customers do. But Weight Watchers can give the best advice and tools possible to help that consumer manage their weight, and can also show them how much closer they're getting to their goal. And I think that's a good analogy here. This really has to be both on the consumer and the provider to help the consumer reach that graduation. Another challenge is just how long it takes. Taking a year is a really long time, and that's a really long time to wait until the ultimate payoff for the product. We have First National Bank on the call today, and their card is really interesting, their Kickstart card, because what they'll tell you is that in as little as 6 months, if you're doing well on the card, they will give you additional credit limits without any additional deposit. And then in as little as 11 months, you'll become eligible for graduation. And that's, from what we've seen, from our scan of the market, the quickest time for both of those things. And Cori, if I've said it improperly, please correct me when I pass the deck over to you. So those are the challenges, and then our recommendations sort of come out of those challenges. One, we'd like to see more increased marketing for this product, and that can be both in the large networks like Visa, from the issuers and the banks, as well as from nonprofits and even the CFPB. We've been encouraging them to do more to explain this product and get beyond these hurdles of consumer awareness. We also think there's more that can be done to segment the base and customize the product using advanced analytics, using big data to say, oh, it's not just one customer. We think there's 4 kinds of customers, as we showed you earlier. Or we can use advanced analytics to give us a slightly lower deposit for customers who are ready to do that. The third strategy is, again, developing a clear customer graduation strategy and making that clear to the customer and figuring out what internal processes you need so that you can guide that customer to unsecured credit and improve credit score. And then finally, coming back to this issue around savings, there's so much more that can be done to leverage the security deposit as a savings tool. Once the consumer does graduate, and let's say they've got $500 in that deposit, in most cases, it's being sent back to them in the form of a check, and the savings account is closed. And that check can take 2 months to arrive because you got to go over to the deposit side, tell them the account's closed, have it sent back. This is a terrible experience for the consumer in most cases, one of the largest complaints that we found, and doesn't leverage this opportunity that consumers got $500 sitting in that account, and that can be used to help that consumer keep saving. They've achieved that difficult barrier, so give them an incentive to keep it in the account. Encourage them to keep saving. Move it to a CD, whatever that case might be, rather than sort of saying, here's your money back and we're done. So those are our key recommendations. Again, you can go into some more detail in the paper. I now want to take a few minutes to let our panelists sort of respond to all of what I just presented. And I gave them each a couple questions. The first I just want to say is, what did you guys find most sort of surprising or inspiring in this research? And Cori, I'll let you go first.
Thanks, Rob. In looking at the research that you presented in the paper that we have, it was very nice to know that the things that we have been seeing for the past 5 years and that we've been battling and trying to solve for are things that you surveyed the customers and you found that those were their concerns too, and those are things that we've been focusing on and trying to solve for, and the ones that we still have left, we now have validation for that.
Great, yeah, thank you.
When we talked on our interview, the deposit, the graduation, all of those things are on the top of our mind right now.
Excellent, and I think we heard that too from some other issuers that people seem to be working in the dark on this product, and I don't know why it is. Different people in the different institutions, there's just a couple people maybe working on it, and so what we're most excited is bringing those people out of the woodwork and helping them get talking to each other and airing these challenges and seeing how the industry can address some of them together. So thank you, and thank you for participating in that interview back then. Rob, what about you?
Yeah, I mean, you highlighted this and we've talked about it many times, but we were so struck by these distinct customer segments. And so going in, we knew we were talking about transactors we were talking about rebuilders and establishers of credit, but we really were caught off guard by this transactor segment, many of whom skewed older, actually, in age, this savers or planner segment. So I really think there's much more to mine there to understand. This isn't just a monolith, and often the marketing is around you're wanting to build or repair credit, and very few are thinking about this as a transaction product. So that was really, continues to be, to me, one of the most intriguing findings.
Yeah, absolutely, especially around these prepaid opportunities. I have one more question for you guys. So we've done a lot of research here, and there's actually more research we have planned, which I'll tell you guys more about towards the end of the call. But I'm curious, Cori and Rob, what else do you want to know about secured card users, or what questions are still on your mind? Rob, how about you go first?
Yeah, I think we still need to dig further into this, the customer usage. Again, you referenced some of it, but having access to scores, how that affects behavior, spend alerts, text reminders, really understanding the journey while on that product, given sort of how complicated it is and then sometimes how unclear the outcomes are. So I want to dig more into that. And then, as I mentioned, we definitely want to, and we started some of this work on focus groups, but understanding these segments, especially as they break down across different demographic lines and lines of age and income and things, to really understand these segments so we can tailor products toward them.
Great. And how about you, Cori?
I would like to see more research in regards to how to find these people. A lot of them, like you mentioned, are off the radar. So trying to find them to offer them this product that can help them out is difficult. Or in the other segment that have a subprime score, they've been burned in some way, shape, or form, and they may be a little more leery to have another credit card. But that's our true issue right now, is just trying to find these people so that way we can educate them and offer them a product that will help them.
Absolutely. It's actually a nice segue for me to speak a little bit about the next phase of the research that we're doing. Precisely because we saw that consumer awareness and marketing was such a challenge for this product, we're doing some follow-up research as a part of the same engagement to understand why consumers who are not yet users of the product are not using the product, what they think about the product, and what messages would most appeal to them to get them to apply for, fund, and then use the product, and also breaking that down by the segment. So we're in the middle of some online focus groups, which is really exciting, and we've intentionally targeted establishers, rebuilders, and the transactors to test a whole series of framing messages and understand why they want the card, how it could benefit them, or why they wouldn't want the card, all these things. But really in a more in-depth qualitative versus quantitative fashion, and we'll be publishing that research sometime in the summer, and we hope to use that to spur additional marketing strategies and innovation around this product. So stay tuned for more of that. I'm very much aligned though with I think what you guys are saying. Okay, as we're going to move forward, I'm going to pass the mic momentarily over to Cori to talk about what she's working on. I want to remind everyone on the panel that if you have everyone in the audience, if you have any questions, please submit them through the questions tab in the control panel. Okay. Cori, let's do a deep dive into your product.
All right. So I'm going to present to you guys some information about our secured card program. Like I said, I took this over about 5 years ago, and when the product first came out without having someone in charge of it, it used to be a take one that was in the bottom of someone's drawer and that you dug it out on occasion when you need it. So right now, the first slide is talking about how we offer the secure card and how people can get a secure card. We've made sure that we looked at our solicitation channels, and we want to make sure that our secure card is offered in the same venues as all of our unsecured cards. We have personal banker online applications, so that way as you're sitting with a personal banker and having a conversation about credit, a secure card is one of the options that you have available. We have them on the placemats, brochures, online banking, take one, anything that a banker may use to talk to their customers. We have secure card presented there in an equal prominence as an unsecured card. We also do direct mails and emails to customers that may have been turned down for an unsecured card, offering them a card that will help them build or rebuild their credit and instructing them how to do so. as I talked about when I introduced myself, we do have secured cards in the agent bank market, as well as we have co-branded secured cards, and we also have national secured cards. Obviously, approval rates vary by market, and our highest approval rates are with our banking partners because those customers are going into banks and they are looking either for credit, they're looking to open up a banking account, so it's an easier conversation to have. And our lowest approval rates is with the national population, a lot of, for various reasons, because we don't currently have a partnership with those people. The approval rate for secured cards is very high, and the majority of our declines are due to ICS or fraud alerts, basically because we can't necessarily verify the know your customer. On the next slide, here's some features that we offer for our secured cards. We want to make sure we're very transparent with what we have. Our secured card, from what we've seen in our research, is the only one that promotes the upgrade to an unsecured in 11 months. And we put that prominently on all of our marketing material. So when someone looks for our card, they understand what the expectations are at that time. And like Rob said earlier, we do offer a credit line increase after 6 months, and that as well is marketed in acquisitions, as well as any customer management pieces that come while they have our card. Our annual fee and rate is on par with our competitors from what we see, and our fees and features are very transparent. The two business lines that I've indicated here before are F&B secured. Those are through our agent bank partnerships, where it has a $19 annual fee and a $19.99 rate. And then the F&B co-brand secured cards, those annual fees range and rates range depending on the partner. A lot of that is due to the rewards. One thing we do with our rewards programs for our co-branded space is that the rewards programs, whether you are secured or unsecured, are identical. We don't want someone to learn about rewards for a secured card and get lesser rewards and have to relearn that program when they become unsecured. And we also want them to have that affiliation with that partner. Obviously, they wanted that card because they liked that partner, they liked that rewards program. So we want to make sure it's not confusing at all and offer them the same rewards. On the next slide,
Cori,
about, yes.
Cori, before you go on, could you do me a favor? There's some folks on this call that I think are not at all familiar with how agent banking works, that may not even be anywhere near the banking industry. Could you give a layman's definition of how these different lines work in just a broad stroke?
Sure. Agent bank partnerships are when banks want to issue credit cards that are branded with their bank name on it, but they do not do the servicing or the marketing or the issuing of those cards. So we do the marketing, the issuing, the servicing of those accounts on behalf of them. So if you get the card, it would be branded in that particular bank. Does that help out, Rob?
And for the co-brand, maybe give an example of a co-brand card you guys issue.
One of our co-brands that we issue is the Chrysler card. And so Chrysler has an unsecured card that has the Chrysler Rewards program. We do have a Chrysler secured card as well.
Great, thank you.
All right, so the next slide talks about the product growth that we've seen in the past 5 years. We have seen a compound annual growth rate of 36% over the last 5 years. The more focus we've had on these cards, it has had impact on their behaviors and how they use the card. Spend has increased 25%, delinquencies have decreased 27%, and because of our upgrade process that we have right now, attrition has decreased 73%. So we're really proud of these stats because we feel that this just shows that we are trying to do the right thing for our customer and that they're appreciating what we're doing for them. The next slide talks to roads to success and things that we've learned over the past 5 years and what we strive to tell our partners when we onboard them. And we tell them that we want our partners to offer the secured card through all their marketing channels. If they only offer an unsecured card on their web, but we send a direct mail out that has secured, there's a disconnect there that maybe it may be a fraudulent offer or it's not something that the company stands behind because it's not on their website. So we try to eliminate that gap. We also have a cross-sell process that we do where if someone's turned down for an unsecured unsecured product, we go ahead and offer them a secured card product in that same branding, the same rewards, and whatever they normally applied for, because obviously they had some sort of pull to that program, and we want to make sure we utilize what they were passionate about. When we talk to new partners that want to do business with First National Bank of Omaha, we tell them that by having the secured card as part of their card portfolio is that we do try to have a product for everyone. The last thing a bank or a co-brand or anybody wants to do is turn down their customers, because their customers are their very most important person to them. So we want to make sure that with a secure card we can help them close any gaps and have a product for anybody that's out there. As Rob alluded to earlier, the operations of a secured card is very difficult because you do have two accounts that are open. You have the credit card account open as well as the deposit account, and these have to be handled in an entirely different manner than an unsecured account. So, you know, when we started, we've issued secured cards for over 40 years. So when I started looking at this 5 years ago, it was a very much 100% paper process, and now we're probably at like maybe a 10% paper process. So you really have to focus on those operational efficiencies, otherwise your cost per account will be very high. We do try to do a set it and forget it marketing strategy. Our partners have great websites, great emails, great ways that they market our card or how we market it for them. We want to make sure that even if in some pieces where secured card isn't the normal message or the primary message of the account, we do have some sort of indication on there for secured card when applicable, because if you get this mailing and you don't have good credit or you don't have any credit, you don't want this piece to offend you. You want to know, oh, there is a product out there for me. So in set it and forget it, we try to put it out there on the website, so when we do send out an email, direct mail, or a banner ad, you will also see the secure card when you go to the site. And then also advertising our upgrade and credit limit increase opportunities. We feel that being upfront with the customer and letting them know exactly what we're going to do gives them something to work towards or look forward to. And the last slide I had talks really about the upgrades or graduations. That's something that we worked really, really hard to make it seamless for the customers. Prior to 2014, our upgrades were all by customer request only. So that way we could re-review their credit, get them into an unsecured card. You know, we tried sending out mailings, but we still had to have them do a new application. They got issued a new credit card number. They had a credit bureau inquiry, and it was very tedious for the customer. And so most people were leaving us before we had the opportunity to give them an unsecured card and congratulate them for the job that they've done. So what we did in July 2014 is we 100% automated that process. So that way we reward those customers and reach out to them before they get reached out to by other issuers or before they have to contact us in inquiring about an unsecured card. We automatically return the deposit to them. We upgrade their current account number to an unsecured card so they don't have to have any lapse in having a card or make any changes on any bill pays or anything that they may have. And then we also review their account for a credit line increase. Then after they're upgraded, they're part of any other account management program that we may have. They can get balance transfers, they can get spend rates, and they are truly treated like an unsecured account. So that's our program, Rob, and thank you so much for letting me speak here today about what we have to offer on our secured cards.
My pleasure. Thank you so much, Cori. As I think you've all just seen, you know, you are addressing many of the challenges that we found in this paper, and what's most exciting is that it seems to be paying off for you guys, and that's really promising for the whole industry. So thank you so much. I'll give Rob, if you have a question or if you have a statement about some 30 questions that have come in from the panel. So I'm just going to move us very quickly to those. But Rob, is there anything you want to say in response to Cori's presentation?
No, I just echo that. Again, thanks, Cori, for sharing this, and really, you know, you are pointing the way, and I think the graduation really is the key to this whole thing, and the fact that you've now automated. I think, Cori, you said that reach out to them before others reach out to them. Our sort of running line here is that if you don't have a graduation strategy for your secured card consumer, you can be sure your competitor does. I think that's one of the challenges for the product is as people get poached and going to other competitors, you lose that all that work you put in and the potential lifetime value. So the fact that you're addressing that and that really seem to have solved for it in a large way is exciting for everyone in the industry.
Great. I'll remind everyone on the call, if you have any questions, please send them in. I've already got a ton of them. So a few first for you, Cori, just in response. I think since we're talking about the challenges around marketing, how do you currently market the product? I mean, you talk about the channels, but what do you think as the most effective marketing strategies within your channels and to outside your channels? And someone has suggested that you partner with check cashers in the area. So tell me what you might think about that.
Okay, Rob, as far as marketing channels, in the presentation, it talks the channels that we did, but as far as the messaging, we message this as a credit building product where you can build or rebuild your credit. That's the messaging that we build around the product. And also, for our agent bank partners, a lot of it's in training, understanding when a product, what products we have and the features of all the products, so they know that the secured card is available when they're talking to someone that's new to credit or that may say, oh, I've been declined for credit in the past. We give them that option. As far as check cashing services, we do not have a partnership with a check cashing service at this time.
I think it was more of a suggestion than a question. Rob, if I could jump in, I would say one of the groups that we have seen some success with is institutions partnering with local community-based organizations, be they VITA sites, around tax time, or other credit counseling community organizations, housing organizations. And so we've seen some effective partnerships, and we should mention that a lot of this work that we've done with CFSI really came out of, was inspired by some work that Aspen Institute did a few years ago around working with CBOs and connecting those credit organizations to providers.
Yeah, that's a great point. A number of questions here come in as sort of how do you know what the best secured cards are, and where does the consumer go to learn about these more generally? So I'll try to answer that a few ways and let you guys chime in. So first, if you wanted to take a look at our report on right after, I forget the page number offhand, to 20-something, we have a table which shows providers the largest market share of secured cards based on our consumer survey. So I wouldn't call it 100% accurate, but it's pretty close. When you look at those products, you can get a sense of what they look like and what the variations are in terms of the deposit minimum versus APR versus who's got rewards and who's got what kind of graduation strategy that they're publicly doing. A number of the online sites, I know NerdWallet and Credit.com and a few of the other ones, review secured cards. I doubt they are putting the same amount of emphasis behind it that they would do their review of reward cards or how you can get the most frequent flyer miles, but a lot of them actually do have that. And some of the sites where you can get your free score, like Credit Karma and CreditSesame.com, will suggest for people with low scores a secured card. So there's increasingly some information about that. Rob or Cori, anything you want to add on where consumers generally go to learn about secured cards?
In our experience right now, where we have those agent bank partnerships, they are going into their bank and asking what they can do, and those are some of the conversations we're leveraging.
Yeah, and I'd say
it sounds like a lot. Go ahead.
I was just going to say, Rob, as you indicated at the top of the problems right now, there isn't really a good place, and that our phraseology of hidden in plain sight, we actually mean that it is tough for a consumer to even find this product at all in the market, and there's not really a good sense of what options are out there. So that's one of the things we're hoping to change.
Absolutely. So I got a couple questions here around the deposits. So one is someone asked, does this product only work for a banked customer? And so I'll start off with answering that, and I think the answer is, well, by default, you become banked by having this product, even if you aren't in the beginning, because an account is going to be open for you. So if you have challenges to opening an account, normally I think those challenges would be the same here. That said, there are, how do you get people's money into that account, especially if you're applying online, right? You have to literally bring your cash to a bank to open up the account. Or is there a way in which you could send that money, say, through some kind of online mechanism, maybe it's PayPal, or being able to go into a Western Union and add the cash, the way you can add cash now to a prepaid card. We heard a little bit about that, but I haven't seen a ton right now of innovation in that space. But I think for the really unbanked, that's something that issuers need to consider. So Cori, I'd be interested in your answer to this question. And also, someone asked, in the case of an agent-bank relationship, so who holds the deposit and how do you manage the return of the deposit if it's not being held in your bank?
All right, for both those questions, we do have the ability in those banking relationships that we have that if someone doesn't have an account, we do accept money orders, cashier's checks in those situations, or wiring of funds. So you don't necessarily have to have a checking or savings account open or a prepaid account open in order to fund the account. So we try to help that situation, but those are mainly in a face-to-face scenario. And then the second question about holding the deposit, due to the laws of perfecting the deposit, we hold all of the deposits regardless of who our agent bank partner is. If we do not hold if the same entity does not hold the deposit that issues the cards, then that deposit can't necessarily be used. If that account goes delinquent, that deposit wouldn't necessarily be able to be used. So in instances of our agent banks, we hold the deposit, so that way we maintain returning those deposits to them.
Got it. So you really, maintain a lot of control over that whole process.
That's correct.
Yeah. Great. Okay, so more questions here. Let's see. Hold on. I've got so many. Give me 1 second here. So for Cori, there's a lot of talk now about obviously chip and PIN, and then thinking about NFC. Are you also ensuring that your products your secured cards are sort of matching whatever technological upgrades that your other not unsecured cards are going through?
Yes, we are on the same path with both our unsecured and secured cards. Our secured cards are EMV capable right now. We issue EMV cards, and they're also available to be used in Apple Pay and those online wallets.
Great. All right, question for you, Rob. Someone here is asking about the difference between secured card and credit builder loans as credit building type products. I know it's something you thought a lot about. So maybe you can comment on that question.
Yeah, I mean, they're really quite similar. In fact, I mentioned Aspen earlier. One of the interesting innovations that came out of work they did with Justine Peterson was a combination of a credit builder loan and a secured card. The credit builder loan was issued by Justine Peterson, and the loan proceeds actually went to back or open a secured card. And that way, an individual had 2 trade lines reporting to the bureaus at the same time, which rapidly accelerated the increase in their score. So they do function in a similar fashion in that and we've seen other models from the Federation of Community Development Credit Unions around save and borrow, where you use that lump sum and you in essence pay it down. So those are great tools, and I know credit unions do quite a bit of that work. What I find interesting about the secured card, though, is it adds that feature of being able to make transactions as well. And I think that's what makes that maybe a more compelling value proposition. But yeah, both are great tools, particularly for that credit establisher.
Great. Another question for you, Rob. Someone here is asking about tax time opportunities. There's ways to leverage a tax refund as a moment of funding a deposit. You want to speak a little bit of that?
Yeah, no, absolutely. I think that's one of the, I mean, of course, folks have been doing this for many years. One of the great opportunities is, as we've been talking about throughout this call, generating that lump sum, particularly if that minimum deposit is $300 or $500, is a significant amount of money. And given tax time, particularly for earned income credit consumers, that's a lump sum they'll have, one of the largest paydays of the year, and having models that they can then use a portion of that to back a secured card can be a great either reset moment in their financial lives or a way to start building credit. So again, I've seen examples of that in banks and credit unions leveraging that tax time, particularly again in partnership with Vita sites and the like. But yeah, so I'd really encourage issuers to pursue that opportunity.
Great. Finally, I'm seeing a lot of questions on here about kind of what advice to give to a customer, and how do you know when a customer needs a secured card versus a debit card versus a prepaid card? And I'm curious, Cori, like how do your bankers talk to consumers about their options and explain what's right for them?
Well, I'm talking about the secured cards. Like I said, we market it as someone trying to build or rebuild their credit. Obviously, if somebody wants just a card as a payment vehicle, you could choose between the prepaid card or a credit card or a secured credit card. What we do say with the secured card is we do report to all 3 credit bureaus in order to have them build their credit. I know in me talking to our partners, what we tell them is, you know, if someone is having trouble getting a loan, if they eventually want to buy a car, they eventually want to buy a house, they have no credit or they've been bad in their credit, that let them have a secured card for a year, and after a year, a majority of the people that we have, they have raised their score or got a score above 650, and then they can have those things that they want. So that's the education that we give to our partners when we talk to them, and we really try to tell them that if you have a secure card and you get that to report to your credit bureau, the things that you want later in life will come a little bit easier.
Fantastic. All right, I apologize, but we have to wrap this up because we are at 58 on the hour, and I have a few closing thoughts. I'm sorry to everyone whose question I didn't get to. We will do our best to respond to you following the webinar. I also think many of your questions you'll find answered in the research. So let me point you to that research. Again, bit.ly.com/hiddenplainsight. There is a 3-page design executive summary and then a 50-page full report for those who really want to get into the weeds of it, including 30 pages of data tables and lots of good juicy data in there. So please go check that out. Please tweet it out, share about it, and ask us if you have any questions on it. We have another webinar coming up called Taking Financial Health to Work, Employer-Based Solutions. That's going to be Thursday, June 2nd at noon Central Time. You can register at CFSI's website. The link is on your screen. I also want to make a quick pitch for CFSI's consulting services, particularly if you're interested in exploring how to better create a secured card. This is something we can work with you, and if appropriate, our other partners to bring in to help you design the strategy or go-to-market plans. You can learn more about that at bit.ly.com/CFSI-forum. And then finally, just our general contact information. Please stay in touch with us. I have my personal email address up here. If you're particularly interested in a point about this research or exploring more with us about how you can be one of these best practices for secured card issuers or be involved with the upcoming phases of our research, please let us know. And for everything else, please go to cfsinnovation.com and you'll find all our research. Thank you so much to my panelists, Cori and Rob. You guys were fantastic. I thought this was an exciting panel. Judging by the number of questions and participants, the audience did as well. So I hope wherever you are in this country, you have a good rest of your day. Thank you so much.